Welcome to Bro Billionaire. Today we are going to discuss US oil. We'll see whether it's going to go down more or whether it's going to turn on the upside. So today it's 15th of August 2022. So this was the COVID low from where we are going to analyze the US oil. And this is the wave count that I have plotted with 1, 2, 3, 4 and fifth wave completed. Here fifth wave's internal moves are also very clear with 1, 2, 3, 4 and 5. So assumption is fifth wave has ended here and we have started the bigger consolidation. So yeah, so the consolidation is about to end. That's my conclusion is. So wave 1 and 2 will be like this, right? 1, 2, and then we will have a bigger rally in the third wave. So third wave will be very sharp going on the upside. It will break previous high of US crude oil. This is how the wave count is telling us. So another different count people may think will be, so let me delete this. So it can be like this as well. So people may call this as wave 3 and 4, and they can also call it as wave 1, 2, right? And 3, 4th is currently in progress, and fifth wave will shoot on the upside. So for that, it should not break this high, right? So if this is 1, this is 2, and if you are assuming this as a 3 of fifth wave and this as a fourth wave, right, it should not break top of wave 1, otherwise this is not a valid impulse pattern. So that's why my wave count I am considering as more accurate with 1 to completed here. Here internal wave count of this particular move is also not so clear, but if you go to on a 1 hour chart, these things are a bit clear. So hence I'm considering 1, 2, 3, 4 and 5 wave completed and third wave internally completed here, right? So now let's analyze the fifth, like the move after the fifth wave. So which is the wave 2 that we are considering. This is looking like a complex zigzag correction. This can be a double or a triple zigzag. As of now, we can call it as a double zigzag correction because internal moves are zigzag moves, 5-5 moves. And let's check that on the 2 hours time frame. So on 2 hours, we can see here I have plotted the wave counts as wave A, wave B, and wave C. So wave C has made a small low here. This was 93.51. This is 92.92. So wave C is still valid, and all these moves, right? A wave is looking a 5-wave moves, 1, 2, 3, 4, 5, right? B wave is a pullback, ABC zigzag correction. Then again, wave C is a 5-wave sequence on the downside. So this is a W wave and a connecting wave, and after that it has given a pullback as ABC in the form of X wave. So here the channel has been formed, right? So here we can plot the channel by connecting these 3 points, 1, 2 and 3. So then we get a channel bound move. So currently it is reaching the end of the channel. So and also when you like after WX there is a Y wave also pending, right? So this is a W, this is X, and this is Y wave. So Y wave is about to finish, and it has reached 87.29. So let me zoom in. So this is 87.29, which is Fibonacci extension, right? 87.29. So how are we getting that number? By plotting Fibonacci extension on these 3 points, 1, 2 and 3 point, right? So you can get that Fibonacci extension tool, which looks like this from this menu. So here we can check the internal waves of wave C, which is again looking like an ending diagonal pattern, right? So here also I'm assuming ending diagonal pattern on the upside, and on the downside also it has formed an ending diagonal pattern. What is ending diagonal pattern? It looks like this. Okay, when you type on Google ending diagonal Elliott wave, you get this pattern. So here we can consider that wave C and wave phi has ending diagonal patterns. In uptrend, it appears in the fifth wave or wave C, and in downtrend also it appears in a fifth wave or wave C, and it is a zigzag move. Internally it has 3 moves going on the upside. So you can read more in detail on the Google about the ending diagonal pattern, but these are the images that I want to show you. So both of them have appeared on the US oil chart. We'll check that one by one. So now let me go to the chart and enable the hidden parts. So here, as you can see, it has formed an ending diagonal, right? So wave AB completed here, and wave C was in progress from this point onwards, which internally has ABC moves, wave 1, then again ABC moves, wave 3, then again A, B, and C moves, right? So this is how the ending diagonal is represented, and it is a zigzag structure. It is 3 wave structure. Internally, 3 waves will be there for 5 swings. All 5 swings will internally have 3 wave structure, and the waves and the lines from 1, 3, and 2, 4 will be converging on the upside. So this is ending diagonal pattern, or a rising wedge, you can call it, right? And then now we are in a Y wave. So Y wave internally has A, B, and C waves. So this looks to be a more fitting pattern. There are some assumptions by other like Elliott analysts that this could be an expanded flat with wave A, right, and wave B, sorry, wave A of pullback again here, then wave B here, and wave C on the upside, right? So this they call it as an expanded flat correction, which also looks valid. But internally, when I check the internal moves of 5 waves here, right, I'm assuming this as a zigzag correction. So this is ABC zigzag correction, hence I'm labeling it as W here, and then X here, and then Y is in progress. So now when you check A, B, and C waves, so this A wave has 5 waves internally, 1, 2, 3, 4, and 5, which are not overlapping. So which is a standard impulse structure in wave A, and wave B is a pullback A, B, and C wave as a zigzag correction, and now wave C is in progress. So internally there is a problem here when you count wave C, which can only fit as an ending diagonal pattern. So let's check the internal structure of wave C from this B wave points onward. Okay, so when I open that levels, you can see an ending diagonal here, right? So this is ending diagonal in the downtrend. So there are no proper, this is not a proper impulse structure. It has internally ABC moves, right? So hence we can label it as A, B, and C, right? So here A internally has 1, 2, 3, 4, and 5 moves. So this is A, this is B, right? And this is again wave C, which is 5 wave structure completing wave 1 here, which is the biggest wave in the ending diagonal. So this is the biggest wave. So this is second biggest wave, and fifth wave will be less than the third wave. So here, as I have labeled, you can see here A, B, C again. Now A, B, C could be possible, and Y could be ending near $87. So yeah, let's check the internal moves here, right? So here A, B, and C moves are possible. So it has already breached today the previous low of third wave. So previous low was 87.03, and today's low is 86.84. So it should be going on the upside once it completes this pattern. It may be completing this pattern. If you go and check on the lower time frame, you can sense 1, 2, 3, 4, and fifth wave could be pending, making one more low, and this could be wave A and wave B here of fifth wave. So this also needs to be ABC correction, right? So 1, 2, 3, 4, 5 is possible, and it can make one more low. So yeah, so once it makes one more low, there is a chance that it will shoot on the upside. Or what you can do is you can wait here for the entry once it breaks this swing high, right? So this is our swing high or fourth wave, or even you can call it this a trend line resistance. So once it breaks this trend line resistance, we should assume that it is heading to the origin of the wave C, which is ending diagonal. Usually ending diagonal moves towards the start of the wave. So it can go like this, ABC, right? So ABC is possible also. Okay, so yeah, it can go like this, A, B, and C. Something like this can happen. So C wave, I'm assuming here, ending here. So wave A, B, like this, it can move towards upside. So this is one way to consider and this can be an X wave, and then final there can be a Z wave again going lower on the downside. But this looks to be an assumption, and this is not yet confirmed whether it's a ABC pullback on the upside or whether it will be an impulse structure breaking the previous high. So once it breaks this previous high of 129.42, we can assume that the correction ended as a WXY, which is a double zigzag correction. If it doesn't break, faces the resistance near channel top, then there is a chance of another drop as wave Z, which is a triple zigzag correction. Since wave W and Y are equal, triple zigzag correction is also possible, but this is a little bit a rare pattern and rare to find the triple zigzag correction. So hence I am assuming it can even break the previous high of 129.42. Until this is not broken, we are not sure, and it can even fall on the downside as Z wave. So for now, what I'm waiting for is break of 95.04, which is a big number to cover. As of now, it is still struggling here below 90. Once it goes beyond this, we can expect it to hit the 113 level. So now what if this is not an ending diagonal, and so what is the invalidation point for this ending diagonal? So the only invalidation point is if the wave 5 goes more deep and goes beyond the length of wave 3. So this is the length of wave 3, right? So when you calculate from this point onward, so let's check the approx level below which this may not be an ending diagonal. It is coming around 77.50, right? So if this fifth wave goes beyond 77.51, I would assume that this is not an ending diagonal and our wave count was wrong. So this is how I'm looking as an invalidation point for the ending diagonals. Then in that case, this will be something else, and internally it will be a more complex correction. Let's say A, B, and C here completed, right? So then it will be and W wave, and this will be some different pattern altogether if it goes beyond 77.51. So what we need to do is wait for break of this 95.04 for potentially upside towards 114 minimum, right? After that, it can even go shoot on the upside, breaking this, also make one more low as a triple zigzag correction. So that's all I had to say in this video. If you have anything else in your mind, do let me know in the comments, and see you in next video. Stay tuned, subscribe to the channel. Bye bye.